On Press Perspective today, we touch upon the relentless rally of the South Korean stock market and its impact on the local economy. Do stay with us. Hello and welcome to Press Perspective for this Friday, May 29th here in Seoul. I'm Min Sun-hee. Following its launch back in 1983, the Korea Composite Stock Price Index, known as Kospi, took 18 years to climb from 1,000 points to 2,000 points. It also took the index another 13 years to rise from 2,000 to 3,000. But as one British daily so eloquently put it, the jump from 4,000 to 7,000 took 4 months, while the surge to the 8,000 mark took simply 2 weeks. For more on this, I have Steven Borowiec with Japanese weekly news magazine Nikkei Asia here in the studio. Steven, it's great to have you here.
Nice to be here, thanks.
I also have Professor Oh Joon-seok at Sookmyung Women's University joining this session virtually. Professor, as always, it's great to have you with us.
Thank you for having me.
Steven, we shall start here in the studio. Let's begin with a recap then of the South Korean stock market action this week.
It was another quite brisk week. I think the Kospi opened the week at around 7,800, and then it closed today at around 8,448, which I think is an increase of about 7.6%. So that's a huge increase for 1 week. As we know, the markets are mostly motivated by how people feel about things, sentiment, and so I could say there was 2 things this week that might have made people feel better about investing in the Kospi. One of which was the quite significant deal that was reached at Samsung Electronics between the unions and the management. They agreed on some pretty hefty bonuses that would be paid out to workers in the memory chip division. And so the bigger significance of that is that it avoided a prolonged shutdown at Samsung, which, as everybody observing the Korean economy, including the government and experts, was flagging as a real risk, because the semiconductor sector is in the midst of this huge boom period, and if they had to slow or cease production, that would have led to some pretty significant losses. The other thing, and this has to come with some caveats, I think the consensus over the week, generally speaking, was that the worries over the Strait of Hormuz were a little bit milder. There was some signs of the U.S. and Iran holding talks and maybe agreeing to open the strait. I think there were some vessels that managed to cross, and that's a mixed bag, because if you just look at headlines, it seems like every 24 or 48 hours the picture there has changed. It's either like signs of optimism or signs of a risk of a more prolonged shutdown. So this is what we're seeing in the Kospi is really unique. Just as you laid out in the intro, Sunny, this is an incredible amount of growth, compressed in a really short amount of time. One kind of under the radar piece of news that I saw yesterday was that the National Pension Service has decided to invest more at home, and I think that's significant because the National Pension Service has always been under pressure to seek the highest returns, and that's usually meant going abroad. So that's the kind of sign of long-term confidence in the Kospi that we might see more of, but for now, I think all we can do is buckle up and watch the ride.
Right. Professor, speaking as a scholar, what do you believe are the factors fueling the record rally on the local bourse?
I'll say 3 factors are the key drivers: memory chip super cycle, value program, and capital inflow from the global fund. First, the global super cycle. Factors pushing the Kospi is for sure is hyperconnection in the technology hardware sector. As Mr. Borowiec commented, Samsung Electronics and then SK Hynix are the main beneficiary of the global AI boom. Effective demand for HBM and DRAM chips has led to historic triple-digit profit forecast. In addition, global tech giants are directing massive capital flow into Korea and Korean market because they need to control the vital bottleneck in AI supply chain. For the second, due to government-led corporate governance reform, a so-called value program, the government implemented a sweeping amendment to the Commerce Act in a way to curb the Korea discount, which might be caused by opaque management system and by weak minor shareholder protection rules. These reforms expand board of directors' fiduciary duties and then mandatory retirement of treasury shares. Accordingly, companies are pressured to adopt a government-led value program, boosting dividend, share buybacks, and overall distribution to reward investors. For the last, capital inflows. Reforms such as the increased use of omnibus accounts have streamlined global trading, attracting more investment banks, institutional players, and diverse foreign capital pursuing global earnings momentum. Domestic liquidity has also exploded, propelled by retirement pension and retail capital flows into ETFs. These global and domestic fund inflow causes direct and continued buying pressure on the biggest stock market.
Right, and speaking about the players within the stock market, Steven, the Nikkei Asia recently touched upon the debt-financed investments, stock investments by individual investors here in the country who are afraid of missing out, that is. Could you tell us a bit more about this particular coverage and your observations on the ground here?
Well, you got it right there. It's kind of the investment version of FOMO, or it's motivated by FOMO. It's people seeing how much the stock market is climbing. Maybe the friends of theirs or colleagues of theirs are making a lot of money. So it's essentially these are people who are investing money that they don't have. They are borrowing money for the purpose of putting it into the stock market, trying to take advantage of these heady times. And my colleague Nami Matsura just reported on this, and she flagged that margin loans to retail investors have gone up really significantly. I think it was over 30 trillion won, which is like a huge increase on a year-on-year basis. And so this raises the question of, it introduces a fair amount of risk, because investment in the stock market is not guaranteed in any way. If these people lose their investment for whatever reason, they would still be on the hook to pay back these loans. And so, what does this mean? Does this create fears of a bubble? Does this create fears of delinquent borrowers? And sort of looming in the background of all this is people's concerns over their general economic well-being, because there's not a very strong social support system for when people get old. There's a quite weak national pension system. A lot of people have been priced out of the property market. The houses in all the desirable parts of Seoul are kind of beyond the budgets of most normal people. And I think people are a little bit reluctant to invest in property in smaller secondary and tertiary cities because of the overall falling population in Korea. There's a sense that some of these second and third tier cities are emptying out. And just a real kind of polarization of asset wealth in the capital area. And so this speaks to all of that. I mean, it also speaks to a lack of confidence just generally in the employment system. People don't feel like they can earn enough in their jobs to get ahead. And, when there's a gold rush, you're actually going to have, a lot of momentum going towards that. A lot of people competing for this same output and these same spoils of this stock boom. But it's really something to follow going ahead, because we won't know yet how long this boom is going to last, and we won't know just how much risk these investors have incurred. If they're able to ride it out and they haven't taken out loans that are too huge in scope, they could probably be okay. But it's the kind of story that's a kind of snapshot of a lot of different variables in the economy coming together.
All right. So as Steven just said then, Professor Oh, some are calling the action in the stock market a boom. Others are calling it a bubble. What are your thoughts?
Mm-hmm. Yeah, it is hard to say which is right, but a massive supply of shortfall in HEM chips has propelled to focus 300% earnings growth for Korean industry in 2026. Thus, at a distance from the bubble, Korean tech leaders could sustain their ample profit on and on, I might say. And the rally is further supported by structural market reform as Korea successfully worked to elaborate its equity market to advance the level of market status. The Kospi's breathtaking 100% surge in 2026 has driven by an unprecedented global AI hardware supercycle. It could have good reason to say bearish viewers argue that the speed and concentration of the current rally present severe systemic risks. Yes, it is to the point. The rally is precarious because it relies almost entirely on two semiconductor giants, Samsung Electronics and SK Hynix, now over 47% of the total Kospi weight. Someday in the future, when cloud giant happen to scale back investment, semiconductor demand could weaken on a sudden. Local retail day trader have plotted the market using high leverage and inverse ETFs. This exacerbates the severe intraday swing. And the bubble debate hinges on whether AI-driven demand and foreign inflows can sustain valuation, or whether that fuel the speculation and currency risks will trigger a correction. Nobody knows what will happen.
Right, indeed. Nobody will know that. Meanwhile, Stephen, the Bank of Korea, it held its benchmark interest rate steady for the 8th session in a row while raising its growth projection for the local economy for this year. Could you tell us a bit more about this?
Well, the BOK is not just concerned with the market, it has to be concerned with the real economy, which is in a much more complicated kind of place than the stock market is. So the Korean economy is in a status right now where it's kind of counterintuitively policymakers are having to worry a lot about inflation and low growth. I mean, neoclassical economics would suggest that those have a different kind of relationship, that at a time of low growth, you would also have low inflation and vice versa. But because of the war in Iran, and before that, the war in Ukraine, and then before that, COVID and any number of other things, El Nino, nowadays there are all these external pressures that are driving up prices. So the BOK needs to be concerned about that. But at the same time, they don't want to keep rates too high because they don't want to discourage things like facilities investment, construction investment. The construction, if you look at the BOK every time they release GDP, you can see just how big a portion of the economy construction accounts for. And I'm sure they're quite mindful about that. Some analysts are suggesting that they might raise the rate in the third quarter because that might be when inflation caused by the closure of the Strait of Hormuz really starts to take hold. I think at this point, it's going to be June next week. The war has been going for a while. So far, inflation is held in a pretty tight range. It's not gotten out of whack in the way that the most pessimistic projections proffered that it could. And so I think that the BOK has some room to operate, but going ahead, they're going to just have to manage these two kind of conflicting priorities of wanting to keep prices in check while also wanting to have enough credit available and enough capital available where the economy can grow in the ways that it needs to grow. So a tough job for the new governor.
Right, indeed. Staying with that, then, Professor, what's your outlook with regard to the BOK's monetary policy for the rest of this year?
It is much easier to expect it. Though the political consideration much easier said than done. As expansionary fiscal policy is expected, according to the government, and the BOK should be shifting toward the tightening monetary cycle, and even expected to raise its interest rate from the current 2.5% in the second half of this year. Despite leaving rates on hold in May, rising inflation, robust export, currency volatility, and then housing price, all economic indicators point to the need for a rate hike. Persistent weakness in Korean won is exacerbating import cost and broadening domestic inflation. This is a real threat in the very near future. Rising housing prices in Seoul and then expanding how household debt continue to pose systemic financial risks, making much more urgent for the central bank to intervene with higher borrowing costs. The majority of policymakers are projecting up to 2 rate hikes this year, which could push the rate up to 3%. Analysts expect the first rate increase of the cycle to occur at the July policy meeting. Geoeconomic and geopolitical variables such as China's export push and oil supply instability from the Middle East are identified as factors influencing prices also. The BOK estimates that if import price of a Chinese product decrease by 10 percentage points point, then the domestic core inflation rate would lower by about 0.3 percentage point. The BOK decision-making process will be influenced by these factors as well as political consideration and then it will continue to seek effective housing supply measures to calm down the market anxiety in many respects.
Right, I see. But like Stevens was saying, it's a daunting task for the Bank of Korea for now. Steven, we have time for one more national issue of global interest. Earlier this week, the Defense Ministry, it unveiled its plan for nuclear-powered submarines. Tell us a bit about this plan.
Yeah, it wasn't a totally new announcement because this builds on an agreement reached by Presidents Lee and Trump at the APEC gathering in the city of Gyeongju last year. And at that gathering, the two leaders agreed that South Korea has been wanting to do this for a very long time. It's been an ambition, but using this kind of enriched uranium requires the permission of the United States. And so at that meeting, Lee and Trump agreed in principle that they were both on board with that. And Lee pitched this as South Korea having these nuclear-powered submarines which can stay underwater for a lot longer. They can move faster. They're a lot more nimble. There's a much more effective kind of a surveillance tool than conventional submarines. The way that he pitched this was that this was part of South Korea becoming more self-sufficient in terms of meeting its security needs, and that it would take some burden off of United States forces in the region. So he pitched this as a kind of a win-win. The Defense Ministry came out with this kind of broad strokes of its plan earlier this week, and it flagged the goal of having the first of these submarines complete in roughly 10 years, I think it was, around in the 2030s. There's still a number of things to be worked out because I think that the formal permission from the U.S. requires congressional approval. I'm not entirely sure how that, like where that is and how far away that is from completion. And there's also the question of like where these submarines would be constructed and how that would all go ahead, whether it would involve just domestic South Korean firms or American firms. There's a lot of details there. That the language of the Defense Ministry's press release was a little bit open-ended. Like it mentioned that South Korea would be managing the whole process, that it would be kind of overseeing it, but it left the door open to involvement by U.S. firms. So, I mean, it's a step forward. I think probably the reason that the Defense Ministry came out with this as a press release, as somebody who's covered the Defense Ministry, I can tell you that they don't always put everything out in a very public setting with a press release that anybody can check. Probably they're trying to move this conversation forward. And they've definitely done that, but there's still a number of steps to be completed.
Right. And in the meantime then, Professor, what would be the broader economic implications of South Korea's nuclear submarine project?
Korea's nuclear submarine project is much more than a military initiative, and then it is a national industrial strategy. If managed well, it could transform Korea into a leader in advanced maritime and reactor technologies. However, affordability and political risks and technological hurdle are being considered, I might say, the economic implication could be high-risk, high-return project. It will aim to inject roughly $1.5 billion US into domestic shipyard, upgrade supply chain across related industries, and then stimulate growth through extensive research and development. The broader economic implication, spillover effect of the initiative span across several core areas. For example, the nuclear propulsion technology necessitate development of a localized SMR, potentially offering a stable power for isolated offshore plants and then commercial cargo fleet. Of course, we cannot ignore the fact that there is a limitation. I fully agree with Mr. Borowiec. The U.S. approval for this project is required and tied to major bilateral economic commitment between the two countries. The project directly intertwined with Korea-U.S. defense industrial interest, supply chain standard, and broader sense of economic diplomacy as well.
Right, indeed. Well, South Korea and the U.S. will be talking about the nuclear-powered submarines and their security commitments next week here in capital Seoul on June 2nd and 3rd. That's all the time we have. Professor, as always, thank you so much for your time and your thoughts today.
Thank you.
And Steven here in the studio, thank you very much for your insights.
Thank you.
Right, that ends this week's editions of Press Perspective. As always, thank you for watching and have a great weekend.